Welcome to the Daily Business and Finance Show. In this episode, we delve into Berkshire Hathaway's impressive Q3 earnings and cash holdings surge, the threat of rising retail theft to traditional stores, and the unexpected slump in electric vehicle stocks. We'll also discuss Wall Street's unwavering loyalty to Apple, the outperformance of REITs over broader markets, and how earnings have driven Granite Construction to become the top industrial gainer of the week. Plus, we'll touch on weekly ETF movers including UVXY, Labu, and Nail. Lastly, we'll examine a mixed week for financial movers with Unum and Markel suffering losses while Upstart and Coinbase climb. Stay tuned after our short ad break as we unpack these headlines further. Berkshire Hathaway has seen a significant increase in their Q3 operating earnings, with a surge of 41% compared to the same period last year. This impressive growth is largely attributed to the strong performance of their insurance businesses. On the other hand, there was a noticeable dip in profits within utilities, energy, and railroad sectors. In terms of stock repurchase, Berkshire Hathaway bought back $1.1 billion worth this quarter alone, bringing the total purchases for this year up to $7 billion. Despite facing investment losses amounting to $23.5 billion, Berkshire still holds approximately $157 billion in cash reserves and maintains substantial stakes in 5 major companies, which include Apple and Coca-Cola.
Increases in retail thefts pose a risk to the survival of brick-and-mortar stores. Major retailers such as Target, Dick's Sporting Goods, Lowe's, and Macy's have identified crime as a contributing factor to their decreased profits. A surge in thefts by 20% compared to the previous year has led these retailers to explore technological solutions like AI analytics and RFID inventory tracking for damage control. However, these strategies may inadvertently harm customer service and trust.
Inflation and macroeconomic pressures are posing challenges to the electric vehicle, or EV, market. These factors are causing affordability issues for consumers, which could potentially delay the widespread adoption of these vehicles. This year has seen significant losses for many EV companies. However, Tesla has bucked this trend by increasing its shares by over 70%. Major automakers are rethinking their aggressive EV production targets. Some are considering collaborations with other companies or shifting their focus towards hybrid models. By 2025, battery prices are projected to drop significantly, which could help alleviate concerns about affordability.
Apple's recent quarterly earnings report resulted in a decrease in share value, even though they have achieved a record-breaking figure of over 2 billion active devices worldwide. Goldman Sachs continues to uphold a buy rating for Apple, attributing this to the company's growth in emerging markets and its services division. Raymond James has given Apple an outperform rating, emphasizing the robustness of the high-margin services sector and optimistic iPhone revenue forecasts. Wells Fargo assigns an overweight rating to Apple, indicating double-digit growth for services revenue and impressive sales figures from China and India.
In the past week, real estate investment trusts, also known as REITs, have outperformed the wider markets. This is largely due to macroeconomic factors and strong quarterly earnings reports. The Federal Reserve has decided to keep its policy rate unchanged, leading to speculation that there may be no further rate hikes in the near future. Major players in the REIT sectors such as AGNC Investment and Simon Property Group have exceeded Wall Street's predictions, contributing to an increase in weekly returns for this sector. It's worth noting that the office subsector has seen significant growth, with companies like Equity Commonwealth and Piedmont Office Realty Trust making notable strides.
Last week marked the end of a 2-week losing streak for both the industrial select sector and the SPDR S&P 500 Trust ETF, with gains of 5.35% and 5.85% respectively. The Federal Reserve maintained steady interest rates, resulting in all S&P sectors ending in positive territory. Among the top performers were Granite Construction and Generac. On the other hand, Mastech trailed behind after falling short of Q3 estimates.
In the exchange-traded fund market, the leading performers are Direxen Daily Homebuilders and Supplies Bull, showing a gain of 43%. Additionally, both Direxen Daily Regional Banks Bull and AXS 2x Innovation ETF have risen by 39%. Conversely, long VIX futures ETF has experienced a fall of 40%. ProShares Ultra VIX short-term futures and Convexity Shares Daily Spikes futures have also seen a decrease, both dropping by 31%.
During the previous week, insurance companies were among the most significant losers in financial stocks. However, those who saw gains included a lending platform used by banks, an insurance firm, two businesses related to cryptocurrency, and a regional bank on the West Coast. Despite the Federal Reserve's decision to keep rates steady with potential for future increases, the Financial Select Sector SPDR ETF managed to outperform S&P 500. Unum Group experienced the largest drop due to a decrease in income from its closed block business. On a brighter note, Upstart Holdings saw a surge of 32%, possibly due to anticipated halts on Federal Reserve rate hikes.
And that wraps up the Daily Business and Finance Show for today. Keep investing in knowledge, stay informed, and we'll meet again tomorrow. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, farewell.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.